Hi, my name is Ray Freer. I'm with RF Insurance Maste. I'm a licensed insurance agent in Austin, Texas. I work throughout the state of Texas and try to provide advice to help people and approaches to help save on premium. Today I was going to talk a little bit about major medical and some ways to help you get the premiums to be more affordable. And one of those ways is looking at floating your deductible up a little bit. Maybe you're used to a $1,500 deductible through an employer-sponsored plan, and now you're faced with trying to figure out what to do. Today, a lot of our clients pick $5,000 deductibles, and that just helps keep the premiums reasonable. With that, though, you have a bigger exposure should something happen. And one way to help fill the gap of the deductible and coinsurance is we could add supplemental policies. We have policies that are supplemental accident policies that will work with your major medical and help you pay that deductible. And if you add one of those to a major medical, some of them provide $10,000 coverage annually, or you can pick an amount to match your deductible and coinsurance out of pocket. But those plans for an individual can be as little as $22 a month. That in conjunction with the higher deductible, all of a sudden if an accident happens in your family or you have a child that gets hurt and you need to go to the emergency room, you're not worried about what it costs because you know you have an accident plan that's going to help pay for that exposure. So you may only have to have a $100 payment to take care of the accident. We definitely like to kind of merge coverages together to help people save. On the illness side, the only thing that I've found that can really help, there's nothing that will cover every illness, but we can add a critical illness policy, and that could be used to pay your deductible in the event of a critical illness. So if you're interested in learning more about how to kind of piece 3 policies together or just 2 policies or kind of see how they can work together, give us a call. My name is Ray Freer. I'm with RF Insurance Maste. My number is 512-565-7369. I look forward to talking to you and trying to help you figure out what's best for your particular situation. Thanks again. Have a great day.
Well, one of the selling points of President Obama's health care reform legislation, now the law of the land, was his promise that people happy with their health insurance programs could keep them. But correspondent Molly Henneberg reports that may not be an option for many consumers.
121 pages of new rules were announced this week outlining which health insurance plans will be grandfathered into the health care overhaul and which ones will be subject to the new laws and mandates. Bottom line, a plan has to stay pretty much as is to avoid government intervention.
If health plans significantly raise co-payments or deductibles, or significantly reduce benefits, for example, just stop covering treatments like HIV/AIDS or cystic fibrosis, they lose their grandfather status.
Except for one group, labor unions. The new rules say, quote, any health insurance coverage provided pursuant to the collective bargaining agreements is a grandfathered health plan, even if there's a change in issuers, meaning insurance providers. Republican Senator Chuck Grassley says non-union businesses should have that flexibility too.
If it's good for a union contract health care plan, it ought to be good for a corporation health care plan.
President Obama has promised repeatedly that his administration would not force people off of plans they want.
If you like your current insurance, you will keep your current insurance. No government takeover, nobody's changing what you've got if you're happy with it.
But some business advocates say small companies now won't be able to shop for a better health care deal without triggering the new government regulations.
And they'll have to go out and either start searching for more expensive plans or consider the possibility of getting rid of coverage altogether.
And potentially face a fine for not providing that coverage. But others say the administration's new rules seem fair.
They enable a small business who really likes the plan they have to keep offering the plan within certain guidelines.
Still, the Obama administration's own estimates say that up to 80% of small businesses and 64% of large businesses may have to give up the plans they have today within 3 years. In Washington, Molly Henneberg, Fox News.